Welcome back, investors. The Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. I'm glad you're here with me today, and I am glad to be back. Yesterday, I wasn't feeling my best, so I did not do a Catalyst Watch video. However, on our website, I did share my thoughts on what I am watching. So you can always go to our website, tickertimenews.com, and you can see what I'm watching this week. We're actually going to go over this towards the end of the video, so that way you know what I am watching for the rest of this week. Of course, the Fed meeting, the FOMC, is one of the biggest deals for the market this week. There's a potential reason for why there was so much selling in the market today based off of the Fed meeting and what they're going to say. Are they going to speed up interest rate hikes because inflation is high? What are they going to do? Well, they're talking about it right now, and we'll be privy to that information on Wednesday. So until then, all we can do is wait and watch for what they're going to say or signal. Maybe they don't outright say it, but maybe we can get some clues from what they do say. So there was a little green in the market, like the volatility index. That was certainly up today. Bitcoin is struggling. We'll talk about that. We've got a couple of deep dives that I want to go into. I also want to talk about banks and investing in certain banks as in the interest rates start to go up. There was a question last week about the banks, and I don't think I answered that question good enough. So I've got a better answer today, a little more thorough on that. I also got a request over the weekend about what banks to invest in. So that's another reason why I'm bringing that topic up today. It seems like a topic that's on everyone's mind about the banks and rising interest rates and what are the best banks to invest in. So we're going to talk about that too. Also, Apple, man, boy, oh boy. Apple came close to hitting $3 trillion, but it closed just shy of that mark. That will be something. I know Apple will eventually do it one of these days, and it's getting really, really close. So that's also interesting. Also on the newswire here, I just came across that Callaway Golf, ticker symbol ELY, the golf business is booming. And Callaway Golf announced a new $50 million stock repurchase program. And again, we've talked about this many times. A stock repurchase program is a way for companies to reward investors. That's when a company is buying back their own shares. That helps a stock to appreciate or go up when that occurs. So Callaway Golf just announced that $50 million stock repurchase program. I'm sure that will affect the stock in a positive way. Okay, let's just jump right into it. But before I do, remember, the most important thing, the entire reason why I do this live stream is what's on your mind. If you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. We'll look at the stock chart. We'll look at the financials. Whatever your question is based off of, I will do my best to answer your question. And if I don't have the answer, and I do not always have the answer, then I will look the answer up and get the best information back to you. Okay, with that said, leave your questions, ticker symbol in the comments, and we'll get started. So we all know most stocks traded lower today. The Dow Jones lost 319 points. At one point, it was worse than that. Can you believe it? 319 points is what the Dow lost today. The S&P, it fell 0.9%. The Russell 2000, 1.4%. And the NASDAQ dropped 1.4% as well. As investors, I would say remain cautious ahead of the key central bank decision this week, including the Fed, and continue to monitor the developments around the new Omicron variant. Of course, that's striking Europe pretty hard, especially the UK. So, man, oh man, I've got to wonder, is it FUD, fear, uncertainty, and doubt, or is there a reason behind it? So the Fed is expected to speed up tapering. I was saying maybe around August of next year, but now some are predicting that maybe sooner than that point, maybe in the second quarter of 2022. So we'll have to watch for that on Wednesday. Investors, they were looking for any clue of early interest rate hikes in 2022, and we may get it on Wednesday. The stocks from the electric vehicle maker Tesla, well, it dropped 5% today, while travel-related stocks slipped amid the fast-spreading new COVID variant, with around 40% of COVID-19 infections in London related to the Omicron variant. Also, Moderna, Pfizer, and BioNTech gained after Fauci said COVID booster shots are, quote, optimal care. Whether you believe that or not, that is up to you. As always, whenever I'm talking about the virus, talk to your doctor. That's the best thing that you can do. Don't listen to some yoo-hoo on the internet. Listen to your doctor. That's most important. Okay, meanwhile, as I said at the very beginning, Apple shares closed lower following an upgrade from JP Morgan, and it came very, very close to that $3 trillion market cap. The cyclical S&P 500, energy down 2.8%, consumer discretionary down 2.4%, and financials down 1.2%. Those sectors underperformed, along with information technology, which was down 1.6%. Accordingly, investors tend to lean towards defensive stocks, I should say. In the real estate sector, that was up 1.3%. Utilities up 1.2%. All right, are we getting things back up here? I hope so. Okay. All right, let's oh my gosh. I have no idea. The computer just completely shut off. I can can you hear me? Can you, if you can hear me, just say yes or something in the chat there. This is totally bizarre that it just shut down. Okay, good. All right. Well, we'll get here. Let me get things pulled back up here right quick, and then we'll get right back into it. So give me one quick minute. Got to get Trading View back up here. Oh boy. Wow, this has never happened before. It is certainly strange. I can't believe the feed actually stayed up while everything was shut down. That was odd. Okay. Well, all right. I see all your questions still in the chat, so I will get to all those questions. Let me just get a few sources here pulled up, and then we'll go over your questions. And then we'll get to what I was going to talk about, which is fine. That's what we're here for, to answer your questions. So let's just get this back up here. Open you up. All right, so we got Trading View there, showing Bitcoin. All right, just give me just a couple of seconds here, and I will get this back going again. Wow, live streaming, right? You can never, you just never know when. Oh my goodness, you just never know. Wow. You just never know. Okay, so a lot of great questions. I think I got cut off when I was talking about the share repurchase program of Callaway Golf, which should be positive for it. But we'll get into your questions here. I'll just take it from the top with your questions, and then we'll get right into it. Okay, so all I need is Trading View. That's it. Trading View is good enough. Okay, so let's see here. What's your thoughts on Oracle? All right, I did a video last week specifically about Oracle. I think Oracle, hold on, wrong thing to do there. I think Oracle is in a really good position. I'll pull it up here on Trading View too. I think the stock needs to come down a little bit. It overshot with that gap up, but Oracle is really strong right now. I like the company, but as you can see, Oracle right now, it had this beautiful range that it was in, this beautiful ascending channel. It had a very defined support, very defined resistance, and it has been moving up since the early part of March, the end of February. It has started in this channel here, right here in the beginning of December. So we had this month of November slide out of the channel, but then earnings came in and earnings were excellent and it popped. Do I think interest rate hikes will affect Oracle? Yes, interest rate hikes will affect almost every single company, whether in a positive or negative way. For your fast growing companies, it'll affect them in a negative way. So when we have interest rate, it's kind of like inflation. When we have inflation, when we go to the store, when we have $1, and that that cup of coffee, it costs 99 cents, okay? And then we have inflation. Inflation takes that cup of coffee at 99 cents and jacks it up to $1.99, right? So now our $1 does not buy as much coffee, okay? For companies that are growing and they are cash positive and they have a lot of cash flow, the same thing happens to the dollar for that company. So a company could earn $100,000 in pure profit today, and that $100,000 is worth $100,000. In 6 months from now, if interest rates go up 0.5%, that means that $100,000 is now worth a little bit less. It's just like inflation on the consumer end. Rate hikes it doesn't take the money away from the company. It just means that that money that they made is worth or valued at a lower rate. It's still the same amount of money. They're still making the same amount of money, but the value of that $1 is a little bit less. That's what inflation does to consumers, and that's what interest rate hikes do to companies with their cash. That's why investing in certain types of companies that have pricing power, like Costco, for example, they have pricing power. That means that when prices are increased, right, their input costs, they can either absorb some of that cost or they can pass some of that cost to a consumer. That's pricing power. And a company like Costco has a lot of pricing power. And then you have banks. When interest rates are near zero, then a bank doesn't make as much money. When interest rates rise, a bank then can make more money on the money that it lends out. So if it lends out $1 today, they may get 10 cents from that dollar. But as inflation goes, not inflation, but as interest rates go up, now when they loan out that $1, maybe they can get 25 cents back instead of only 10 cents back. So when interest rates rise, it lowers the future value of a company's profits, but it can raise profits for a company who's lending out money. That's a very simplified way of looking at interest rate hikes. So for a company like Oracle, who's doing really, really well, and their earnings were excellent, in the future, their future profits will be valued a little bit less as interest rates rise. So that's why growth companies and tech companies get hurt the most in a high interest rate market because of all the cash they're generating. That cash is valued at a lesser price than it would be if interest rates were low. And you can also think of it as the flip side. When a bank loans out $1 on low interest rates, it may make 10 cents. But on the opposite side of that, if a tech company wants to expand and it borrows that dollar, it's only paying 10 cents on that dollar in a low interest environment. But when the interest rates go up, that bank who lends the dollar to the tech company, the bank may get 25 cents on that dollar. Well, now the company borrowing that money, now they have to pay back that extra 25 cents on that $1 borrowed. So that's how it works on both sides. And that's why growth technology companies get hurt in high interest rate environments while banks do good in high interest rate environments. And then, of course, those with the pricing power, they also do good in high interest rate environments as well. The healthcare sector can do well as well. But to your question, Oracle. Oracle is very strong. Yes, rising interest rates will lower the perceived value of their future return. So that's something to be careful. And for an entry point for Oracle, I'd want to see Oracle get back down to the bottom here of its trading channel before adding to a position or starting a position. Because right now, as you can see in this channel, it does come back down, and it has been for nearly the entire year. So buying at these current prices at over $100 a share, that's a bit rich. The company's worth it, but being good investors, or if we're going to trade this, we want to make sure that we're getting in at a good price. And right now it's too extended, and you can clearly see it in this channel. It needs to get back down to the bottom of this channel. $95, $90. Those would be good or better entry points for Oracle here. Okay, so that's Oracle right quick. Let's see here. Okay, next one was right here. Let's see here. You are welcome, Josh. Appreciate it. Let's see here. Are those two ticker symbols, or is that a let's see, VARK? Let me come over here. VARK? No. Is that a Carol, is that a URL that you're putting up there? Oh, I think I see them. I think I see them now. Do they? I don't see a ticker for them. Are you just plugging a site there? I don't see a ticker for them. All right, moving off of that one. Let's see who else was up here. Yeah, okay. Crispr. All right, let's look at Crispr here. So we got CRSP for Crispr. All right. Okay. So Crispr here, man, this thing has just been getting hurt. If you're looking for a long-term investment, like if you have the mindset of Kathy Wood that we are about to enter a period of potential deflation instead of inflation, then investing in high growth companies is a good strategy. Although the last time I heard her speak, she talked about soul searching. Those were her words, soul searching, on her strategies. Now, Crispr is a good company, but in our current environment, is it the right kind of investment? Probably not. So what we might need to find for Crispr is a bottom. Where will a base of support start to build for Crispr? That would be what we would be looking for Crispr. Right now, it looks like there's not too many. Cohen just did a coverage on Crispr at a market perform. And if I go look at upgrades, downgrades, the last one was October, and that was a $126 price target with an outperform rating, and that was from SVB. And Citigroup initiated a sell with a price target of $55. So not a lot of coverage here for upgrade downgrades recently for Crispr, which is okay, not too bad. Crispr did announce that the U.S. FDA granted regenerative medicine advanced therapy designation CTX110, whatever that means, right? Let's see here. So they're getting some approvals here for Crispr. But I'm not seeing really anything else positive. Now, on their earnings report on November the 3rd, so almost just over a month ago. They did beat on their EPS, but they missed on revenue. And they did provide an update. I'm looking for guidance here. Revenues grew 456% year over year to 820,000. So not a lot. They estimated 1.31 million for revenue. So not quite at $1 million in revenue yet. So that's really a small company in the grand scheme of things. In this current environment, it's going to be really hard for Crispr to survive here. So not as in going bankrupt. It's just going to slow its growth potential down. So finding, finding a base of support for Crispr is going to be critical. And right now, I'm not seeing much support here, okay, for Crispr. And that's what we need to find. So if we scroll out here and look, and we go back and use this, there may be something around $33, $35 in that range. They may have a bit of a base there, but the stock, I mean, look at it. It's at $72, $73 right now. And if we're looking for any base of support, we've got to go all the way down to $35 or less, maybe under 40 at the highest. So with high interest rates coming, and we know they're coming, it's going to hurt a company like Crispr. So they're not going to do as good. And looking for support under $40, $40 to $30 a share, in between there, looks like where its base floor support is. So I would not be surprised to see this come down even more as interest rates go up. And of course, not bringing in $100 million or even $1 million yet, excuse me. So it's really low on the cash that's bringing in. Let's see here. Okay, so that's that. What else do we have here? Yep. Okay. What's technology? Interest rate hikes for Oracle and tech in general. Okay, IWM. So is that, you're looking at an ETF for that? The Russell 2000 ETF? IWM. That's the Russell 2000 right there. Yeah, look at that base of support that it has. This thing is such a, at least this year, it has been a very easy ETF to trade on. I mean, just look at that. It's just up and down. Now, it's not good for holding it, obviously, because, you know, you want appreciation in your stocks. Or ETFs. But if you look at this, small caps will get hurt just like the big boys will. So if we're looking for a base of support this year, it's been right here in between maybe 210 at the low point and maybe 215 at the high point. Let me bring this up just a little bit to 215. That looks to be where its support has been all year long. So I would not be surprised to see this come down more tomorrow, especially as everybody is gearing up for the big announcement on Wednesday with the Fed. Things will just continue to fall tomorrow. That would be what I could see happening. I think it's a high probability. And then if you're trading this, then you're looking for peaks up here. Maybe the $130 mark is a higher one. Maybe 127. Let's see here. maybe 125 would be the low side, and then the high side probably around 230. So that's your range right there. So if you're going to trade this, like swing trade it or what have you, you can see a very defined entry point for this ETF, somewhere between 210 and 215. And then you buy it at that point, and then it gets up to $125, $130. That's when you sell it, right? And then you wait for it to come back down, or you can sell some puts on it as it comes back down, and then it gets back into that range where you do it all over again. That's what it's been doing all year. So I don't expect anything different from the Russell 2000. It's going to continue to be volatile and have these swings up and down. There was a lot of pressure on this thing right here, November 30th, December 1st, 2nd. There was a lot of uncertainty there at the beginning of December for this. The volume was twice as much, nearly twice as much as average. Volume was at 64.3 million versus average volume of 36.8. So almost double in the volume, at least a third. So that shows you that there's a lot of support in this range. A lot of people are doing this exact same trade that we're just talking about. And the fact that it pays out, does it pay out a dividend? Yeah, it does. It's got a yield of 0.92. Okay. So yeah, this thing's got a range, and it'll be a good trade. Okay, what else did I miss here? Okay, was that all of them? We just did the IWM, the iShares Russell 2000 ETF. Okay, cool. Well, keep the questions coming. I'm here for whatever questions you have. All right. Well, there's the iShares right there for you. Okay. Let's look at Bitcoin here. And then I got banks I wanted to talk about, a couple deep dives, HOG, Harley-Davidson. All right, so Bitcoin, BTC USD on TradingView. There's a link in the description for TradingView. Now, what's big here about Bitcoin is this 200-day moving average. Now, Bitcoin was in this falling wedge, and it just broke loose December 3rd and December 4th. It got to a low of 42,300. So that is very low for Bitcoin there. And man, oh man. So what we have is this yellow line. It's kind of been moving sideways here as Bitcoin's been falling. But this yellow line is the 200-day moving average. In this yellow box, this will be a critical time for Bitcoin. If it falls below the 200-day moving average, and to be frank here, the 200-day moving average right now sits at 46,781. Bitcoin today fell below the 200-day moving average. Bitcoin got as low as 45,727. So it broke below that 200-day moving average. But as you can see, it's at 47,000, 48, 46, 43 right now. So it has pulled back above the 200-day moving average. If it falls below this box right here and that 200-day moving average, That's a very bearish turn, because if we go back and look right here, Bitcoin was in a rally, okay? Then Bitcoin started to move sideways. It fell below its 200-day moving average. Although, at this point, it didn't stay under there very long. It rallied back above it, okay? So one time, okay, here's the second time. Bitcoin had a big sell-off below its 200-day moving average. It traded sideways a little lower, and this would have been from May 18th until August 19th. It traded under the 200-day moving average. So that was several months, right? So the most recent, okay, the most recent time Bitcoin was under that, it was under it for several months. So here it popped back above it, it traded sideways and then fell back below. So we've got several months. Now, if we go back any further, we've got to go way, way, way back to find this. I mean, look, I'm back to August of 2020. I have to go all the way back to April of 2020 to find Bitcoin under its 200-day moving average. That's why it's so significant that right now it's preparing to fall under its 200-day moving average. You can see it's, well, I know it's hard to see. I understand that, but it's sitting right on top of that line. Remember, it's at 46,700. 46,700. That's the 200-day moving average. It's at 47,000 now, 23. It's gone down a few bucks. Okay, question here. Tesla going up. What's good support level? All right, let's talk about Tesla. We'll talk about Tesla. Let me just throw in Ethereum right quick, and then we'll jump right to Tesla. Because Ethereum today also broke something important. It broke below this trend line support, and then which was the ascending trend line support, and then it broke its moving sideways support line that it had. And when it broke its trend line support, the ascending trend line, it also broke under its ascending trend line down here at 37.10. It broke below that today too. It got as low as 36.60. That's almost as low as this big candle wick over here that it snapped right back from. That was 35.75. Okay, so for Ethereum, you know, it can keep falling. It could. This trend line support right here may not be the strongest support, but it is a trend line support, and that's at about 3,700. Okay, so we really want to see it stay above that. Just like up here at this trend line at 4,000, we really needed it to stay above 4,000. That's a very critical point for Ethereum, 4,000. And Bitcoin's was 50,000. Now it's going down. One of the next big marks for Bitcoin is going to be about 42 to 44,000. All right, TSLA. Now, a couple things about the EV sector. Tesla is now below its 50-day moving average, okay? And we say this all the time on the channel. The 50-day moving average is a very important moving average. If a stock is above the 50-day moving average, that's bullish. If the stock is below the 50-day moving average, that's bearish. As simple as that, okay? So always keep that in your toolbox. Now for Tesla, since it ran up so fast, right, there was this gap up right here for Tesla. Tesla can come all the way back down to $885 before it can find good support. So I'd expect Tesla to fall. I think the overall EV market is in a downtrend right now. The exception to that may be Lucid. Now, I picked Tesla over Lucid any day of the week, but this week has something special for Lucid. And let me just talk about this for a quick moment here. But the short, real quick answer to your question is Tesla going down, and where's good support? Yes, Tesla is going down. The next area of support is $885. That's the next area of support for Tesla. And yes, I do think it could go down and touch that. Absolutely. Okay, I want to pull up real quick the Catalyst watch. Now, I didn't do the video last night. I wasn't feeling myself. So, and I always want to be my best for you. But I did leave a note about what I'm watching this week. Now, Lucid is one of those that I'm watching. LCID. Now, again, the whole EV market, I believe, is coming down right now. It had a very nice run, but overall, the market's coming down for them. Okay. All right, it's loading. Now, Lucid, it had the opposite reaction of Tesla. Lucid was up 3.94%, let's call it. Tesla was down almost 5% today. So why would Lucid be going up while Tesla is going down? And look at Rivian. Rivian, R-I-V-N for Rivian. Rivian was up 3.7% today, but Tesla was the one down 5%. Okay, the reason Rivian may get a boost while the rest of the EV industry may be in a downcline is right here. Rivian's got earnings coming up. That's a reason why Rivian could rally. All right. On our website, tickertimenews.com, I did post what I'm watching this week on the Catalyst Watch. So if we scroll down here to Thursday, on Thursday, Rivian, and then we'll get back to Lucid. Rivian is posting their very first earnings report as a publicly traded company. That earnings report is very telling for a company. It sets the whole stage for the company moving forward. Now, here's something that I did find interesting for Rivian. I'll highlight it right here. All right. Now, for Rivian, they have an estimated EPS at a loss of $6.84 on revenue of $1.03 million. Now, the options market has Rivian has and implies a swing of 14% up or down after the earnings numbers come out. So for Rivian, that 14% swing, if we take today's price of $118, all right, and we go up 14%, we'll go 14.5. That puts it at $135, right? Just double checking. 14%, $135. Now, that could also mean 14%, though, in the opposite direction. And if we go 14.5, where does 14.5 put you at? 14.5 puts you directly at my base support for Rivian, $100. I didn't make that up. This is true. If we go off of today's closing number, $118.64, and we go down 14%, that puts Rivian right at my $100 area of support for Rivian. And I think that is a decent buy for Rivian. Now, in our current the macro view of our economy, Rivian could go below that $100 mark. But I think it is a place that is building support for Rivian. Okay, and I do believe Rivian has a ceiling right now at $125 to $130 a share. $120 to $125 a share. That seems to be the ceiling right now for Rivian. All right, back to Lucid. Why is Lucid LCID? Why is Lucid important this week? Why could it move? Well, if we go down here to Saturday, December 18th, and it's not just for Lucid. Let me highlight this whole section right here. The NASDAQ 100 will have a new look on December 18th when not just Lucid, but Airbnb, ABNB, Lucid Group, LCID, Fortinet, FTNT, Palo Alto Networks, PANW, Zscaler, ZS, and Datadog, DDOG, all make the jump to the highly watched index as part of the annual reconstruction, right? Now, since these 6 companies are being added to the NASDAQ 100, that means there are also 6 companies leaving the NASDAQ 100. So expect these names to bounce this week leading up to Saturday's inclusion. Okay, that is why Lucid could bounce this week. And that is why I do believe Lucid was up nearly 4% today because of that. Now, Lucid is above its 50-day moving average, but as you can see with these candles, again, these are daily candles. I always look at the daily chart unless we're specifically looking for something. You can see it's been in a decline since its massive run up. Now, its rally, I would say, has lasted since September the 1st. September the 1st, Lucid rallied all the way, and we'll call it right here at the end of November. November 29th is when the rally ended. So we could get a boost in Lucid this week, but then it'll fall off again. I do believe Lucid is heading lower. I do believe Lucid is heading for sub $30. It's at $38.88 right now. All right, so there's Tesla. Yes, it's going down. 885 is Tesla's support. And Rivian and Lucid both have a reason to jump today while the rest of the market seems crazy. And why Rivian's got its earnings coming up and Lucid is being included in the NASDAQ 100. All right. So that's the reason why those two specifically are running. All right, let's see here. Any other questions? Just remember, you can leave your question in the comments. I would be glad to go over it live during the show. Absolutely. Just making sure I got all your questions. Okay, good. Great questions today, by the way. I greatly appreciate it. All right, I guess now I should get into talking about the banks, since that's what one of the first things that I did want to talk about today was the banks as well. So I guess that's what we'll get into. Unless you have any other questions, I'd be happy to do that now. And just one thing real quick before we get into talking about the banks. If you find my perspective useful, actionable, helpful, then consider clicking the first link in the description. That takes you directly to our different tiers on Patreon. We give out trade setup, stock ideas, other exclusive content, including the popular top 10 growth, top 10 value stocks, and also my weekly top 10 momentum plays. And it's a great way to help support our research analysis, technical breakdown. So if you like that, like our perspective, then that's a great way to get some perks and to help the show as well. Okay, which are the best stocks for a rising interest rate environment? This is the question that I believe are on many investors' minds today. Give me one quick second. Sorry about that. Okay. So let me just ask that question one more time. With the banks, could you get Ally on your way through? Yes, absolutely. I'll pull their stock chart up here too. Speaking about banks, one that is not a bank yet, but is in the process of becoming a bank, I believe. The CEO has not denied it, and the CEO has talked about the potential. What would be good if they got a bank charter is SoFi. And I did buy more SoFi. Okay, one thing here real quick, just on the chart for Ally. It is painfully easy to see here. I shouldn't say painfully. That's the wrong word to use. This rally that Ally has been in, it's been beautiful. And then, of course, we can see here too that in June, beginning of June, this started to stall. Now, you probably wondering, okay, bank stocks, like I mentioned several minutes ago, bank stocks are supposed to do good in high interest rate environments because when they lend out money, they're getting more money back because of higher interest rates, right? The key word there is lending. The more a bank lends, the more a bank gets in return with a higher interest rate environment. So the first thing that you want to do when deciding on which investment vehicle I want to drive, how much does that vehicle lend out? If, for example, you look at a financial company like, I don't know, my mind's gone blank on an example. Okay, you have Bank A, you have Bank B. If Bank A does a lot of lending, okay, and Bank B does lending, but they also do investment banking like a brokerage, if they also do insurance, have insurance products, if they have a broad portfolio of many different financial services that they offer, potentially their lending program that they offer may not be as robust as Bank A, because Bank A, that's all they do is they're a lending firm, okay? That's the only financial service they provide is lending. And if they do more lending, they do more loans, higher value than Bank B, then Bank A will do better in a high interest rate environment. You have to look at how much a bank does in loans. That's the key to understanding which bank to pick over another when interest rates are going up. And again, this is an oversimplified version, just to get the point across that high interest rate environment, if you're lending money, you're making more money as rates go up. It's as simple as that, but again, that's oversimplified. Okay, so for Ally here, it has stalled out a little bit. Now, it looks like here on Ally, it looks like we've got price targets for Ally at about $65 up to, say, $70. A price range in that area. And just back on December 2nd for Ally, Raymond James initiated coverage on Ally Bank with an outperform and a price target of $55. So if we take these price targets, the one before that was November 10th from Citigroup. They resumed coverage on Ally with a buy rating and a $65 price target. So if we take Ally here, I need to bring this down a little bit because we got to get $65. So if we put a line in here at 55, because that was the low end, 55. I'll put a line right there. That's 55. And then we're going to go all the way up to 65 because that was the high end on price targets. That makes it a little more clear. Ally, as they're trading sideways from June to now, well, really from June to October, and then it started a downtrend. Its highs were reaching the low end of the price targets. $55 is the lowest, and that's from Raymond James. And that was on, what was that, December 2nd? Yes, December 2nd, with that price target. Okay. All right, so they're in a bit of a downtrend right now, but that's not necessarily a bad thing. Let's put that line there. Let's get my colors back to normal here. All right, looking at this thing, we could do this. All right, so this is, excuse me, this is a bit of a symmetrical triangle. Excuse me, sorry about that. All right. So if we look at it like this, we've got a symmetrical triangle right here. The bottom is also in a downtrend. The top is in a downtrend, but a bit of a steeper downtrend. Okay. This is where you could potentially get a reversal out of this. So, for example, with Ally here, and then I'll start talking about the banks in general. For Ally here, you could get this where it comes, down here, right? And then it comes back up, it comes down. This price is getting tighter, and then it's barely moving when it's going. And then you could get a reversal where then it starts moving. Oh, no, don't want to do that. Hold on. Let me get my ink back, where it's doing this, back down, and then, oh, come on. And then it's going back up. You could get something like that with Ally over the next couple of months. Okay. So as this wedge starts to tighten up, the price will stop moving so much. Today it was down 3%. It may start moving, 1% or less. That's when you're starting to get really tight in here. And then it could reverse this downtrend and start moving back up towards these price targets. That's a potential. I'm going to leave those lines right there for Ally just to see how close I come. I'm not right. Sometimes I do get right, but we'll leave those there for Ally. Now, something for a little bit of homework for Ally is to look to see what portion of their business is lending. All right, just doing a quick little search. So this will be homework. What percentage of Ally's business is lending versus other financial services? Because that's the big question. Okay, big and auto loans. Okay, that's good because they can make any type of lending, and they can make more money off that with rising interest rates. All right, so that'll be homework for me to do as well to figure out that number as for Allied, because I don't think that number is written down here in their financials. I don't think it is. Switch to quarterly here. No, I'm not seeing it. If I go, no. Okay, just looking to see if they break it down. It should be broken down somewhere. It just may not be here on TradingView. All right, yeah, it's not broken down here on TradingView. No, all kinds of different ratios, but not a split on what they do. All right, that's homework for me, and then I'll talk about it in tomorrow's live stream with the Ally split. Okay, so to the banks, what are the best ones? I'm going to talk about a few that you know, a few that you may not know, and then I'll get to your questions right quick, because I know a lot of you want to get through this bank stuff, and then I'll get right back to your questions. This will be real quick. Okay, so the question that many investors are asking themselves is, what are the best bank companies or banks to invest in with rising interest rates? Okay. Property and Casualty Insurance Company, American Financial Group. Ticker symbol is AFG, American Financial Group. This is a company. We'll look at here on the chart. It had a big run up here after earnings in May. Went totally berserkers there, but then came right back down. You always see that. Whenever there's a big sharp rise up, it always fills the gap and comes back down. Okay. This is roughly a $10 billion firm that offers protection for trucks, boats, agricultural machinery, and other assets. It also offers liability insurance, workers' compensation, and other commercial products for small and medium-sized businesses. This is one that, due to the insurance portion of their business, they usually tuck that insurance money away in a safe yielding vehicle. Now, when interest rates rise, they're usually parked in a low yielding bond of some sort, a U.S. Treasury. As interest rates rise, so do their returns on that invested capital. So it only takes, when you're talking billions of dollars, it only takes a small rise in rates to raise their profits. Because when they're investing in these U.S. Treasuries, for example, these low risk and often low yielding vehicles, they're considered safe vehicles. And they always have an abundance of cash, and they have to have a way to access that cash in a quick manner. So that's why it's always in usually U.S. Treasury. So as the rates go up, it's just more money they're making, okay, without doing any extra work. So that's one to keep on your radar as rates go up. Another one is JP Morgan Chase. Ticker symbol is JPM. Now, I've got a variety here of a few different ones. Now, here's JP Morgan. Looks kind of similar to Ally, that big rally at the beginning of the year, and then kind of started to trade sideways here during the summer, and recently has sold off. And that was the question I got last week. Why are bank stocks selling off when interest rates are going up? Well, it's because interest rates haven't gone up a lot yet, right? The big one isn't expected until maybe the second half of 2022, maybe the second quarter of 2022 at the earliest. Banks don't start making that extra money until the rates actually go up. That's how I should have answered the question last week. And I apologize that I didn't have that information at that point, but I do now. Okay, JP Morgan Chase. It's arguably one of the most comparable banks to maybe say a Wells Fargo, right? Wells Fargo is an interesting one as well, but Wells Fargo does have limits placed on how much business they can do because of their problem they had a few years ago. So, among the leaders in lending, and has a diversified set of business lines, what JP Morgan attracts is that they have been growing their lending book. JP Morgan has been growing their lending book. And at the beginning, when we were talking about this subject, I talked about how Bank A and Bank B, the more the bank is lending out money, the more that bank can make as interest rates go up. I know it's oversimplified, but it's really as simple as that. Additionally, the bank has posted, JP Morgan that is, robust growth across its 4 core divisions. The last thing about JP Morgan is with a dividend yield of 2.5% and growing, the bank is also attractive for dividend-focused investors. So don't forget about the dividend when you are investing or looking for a bank to invest in. All right, another one, an iconic name in asset management is Morgan Stanley. Ticker symbol is MS for Morgan Stanley. Chart looks nearly identical, doesn't it? These banks all kind of move together. Kinda. Now, Morgan Stanley is a great stock to consider for a rising interest rate environment for a number of reasons. Most obviously, the financial stock has more than 1.1 trillion with a T trillion dollars in total assets under its belt. And a modest rise in rates means that it can put idle cash to better use in low risk bond investments, just like the first one I mentioned. Okay? When they're putting that money into that low risk treasury yield or treasury bond, I should say, as the yield rises because interest rates also rise, they're making a profit or more of a profit without doing any extra work. It's all about the lending. And the second one that I would add to the lending part is, what cash must they keep for federal reasons that they can then use to invest in US Treasuries? That would be the second kind of follow-up, their cash flow, right? One other potential consideration for investors is to use an ETF to replicate the financial exposure from more of, let's say, regional group of banks, right? We don't always have to look at the top dogs, Morgan Stanley, right? The big names in the business, the mega cap banks, right? One ETF that expresses a broad view of banks that very well in a regional fashion is the SPDR, the Spider S&P Regional Banking ETF. The ticker symbol is KRE. KRE. Now, this ETF provides exposure to the top regional banks across the United States, arguably an area that is poised to grow faster than their larger national peers. Adding in that the dividend yield is 2%, in this ETF, it could provide more growth and superior dividend income than a single stock from your financial institution favorite. Okay? So, a lot of investors struggle with, which stock should I pick? And that's the whole reason why ETFs were invented in the first place. If there's a sector that you know will do well because of a certain macro, which is the bird's eye view of the economy, the macro view is changing in the environment, and that's rising interest rates, why not an ETF where you can capture the same gains, but without the losses of a single stock pick. It's an option. Now, I specifically picked this one because it's not a big bank. This ETF, again, it represents regional banks across the US. Now, when we're talking about a high interest rate environment, think of the big banks versus the regional banks. Which one has the potential to do more business with the retail sector, with the retail customer? Not business loans, but with, you want to get a loan to put a screen deck or a screen porch or something on your deck. Where do you go? Maybe you go to your local bank to get that loan or to take a mortgage out. And maybe who's got that mortgage? Your local bank. It's a possibility. So that's why I put regional banks on here, because I think regional banks have the most to gain from rising interest rates than the bigger banks do. Don't get me wrong, though. The big banks will do just fine. But I think you have a better option for faster growth, or maybe not even faster, but maybe over the same time period, more chance of the stock to appreciate over this time frame of rising interest rates with a group of regional banks than you do with one of the big banks. It's just an idea. It's a possibility. All right. And let's just look at this real quick. Year to date, this ETF is up 32.3%, right? Let's go to Ally. 32.3% year to date. And if we go to Ally, it's up 32.3% year to date. Well, that's interesting. That regional bank ETF is up exactly the same amount as Ally. Interesting, right? 32.3%. All right. What about one of the bigger ones? Let's go with JP Morgan. 32.3. Let's see. 32.3, and it's up 24.2 year to date. So the regional bank ETF has outperformed JP Morgan. Ally has also outperformed JP Morgan. Interesting, right? Just some things to keep in mind while you're researching what to invest in during this environment of higher interest rates. It may not be the big banks that give you the most gain. Just keep that in mind. All right, let's see here. Let's keep going on. Okay, got another ETF here to look at. Is that what this is? Okay, let's see here. All right, what ticker, Gloria, is this ticker? VARK. The last one I looked up didn't have a ticker either, but there was an ETF. All right, I'm gonna have to come back to that one. If you could clarify, is it the Van Erickson Technology ETF that you're looking at? If you could clarify that for me, and I'll be happy to come back to that. All right, thoughts on Nvidia. All right, Nvidia is a great company. Nvidia, NVDA is the ticker. Nvidia has got a, it's going to do well. It's going to do really well. Now, as you can see on the chart here, Nvidia did run up too far too fast, and it was all around the talk of the metaverse, right? Everybody was searching and talking about the metaverse. I mean, I even had a metaverse video that's got tens of thousands of views. And quite frankly, that's not, I don't get that many views typically. So there was a big rush here, right? And it also came right before earnings, which I should have a vertical there to mark that earnings right there. Okay. Right now, it needs to come back down to its channel. That's what I would say for Nvidia. Right now, its 50-day moving average is at 272. I could see 272 for Nvidia, and that would put it right here at the top of its channel, but back inside of its channel. So for me right now with Nvidia, it would be under 272. Under 272. You've got 270 here for support, so I'm not too far off for what you were thinking. Under 272. If we really want to get this thing, then I'm actually looking further down the line, right here before it gapped up at 228. I'm going to put a line right there. At 228 right there, that's at the top of this resistance area that Nvidia was facing through the end of the end of August and through the beginning part of September. Because remember, when other things were doing bad in September, so was Nvidia. It was doing bad as well. It didn't turn it around until the beginning of October, and that's the start of its rally. But there's a point right here where it was hitting resistance. And then once it escaped that resistance, it gapped up. That's why I'm looking back here at $228 for Nvidia. Now, in the market, when we have reactions, what do we have? Overreactions. So the big run up here for Nvidia was an overreaction. Now what's going to happen to Nvidia? Now there's going to be an overreaction of selling Nvidia. And I think it may come right down, come out of its channel, bounce off this support, and then get right back in its channel. That's a possibility. That's a possibility. So what that looks like here on the chart is it won't move in a straight line, but I'm just going to do this as a straight line. Like it comes down here right through the channel, and then it bounces off of that support right there. Okay. And that's at $228 for Nvidia. Now, again, it's not going to move in a straight line like this. Okay. It may take a month for it to get down that low, but I do think it's a possibility. Okay. Again, that's $228 for Nvidia. And the reason I'm calling it that low is because we had that resistance here, but then it gapped up once it broke through. Another gap up here in this rally. This rally was fueled by overreactions and everybody piling into the stock. So now that people are selling, stop losses will start to get triggered as it gets lower, which will cause it to get lower. That's what I'm thinking for Nvidia right now. But long term, this is a great company. Long term, this is a company that should be in your portfolio. Again, not financial advice. Just what was it called from Invest Answers? Infotainment. Is that the word? No, that's not the word he used. I don't know. But for fun, right? We're just sharing our thoughts here. Okay, so that's Nvidia. Their support, two areas: the 50-day moving average, and then where I would really like to get into Nvidia there. Okay, big on auto loans. Yep, talking about. All right, what's the difference between a bank and a RKT? Is that Rocket? Okay, Rocket companies. All right. So the difference between a bank and rocket companies. First off, we need to understand what rocket companies does. All right. And if you look here for rocket companies year to date, they're down 21.3%, while the regional bank ETF, they're up over 30%. Ally Financial's up over 30%. So Rocket Companies is not a bank. That's the first thing to note. And that's in your question. What's the difference? So for Rocket, oh, it's at the top this time. Investor information. Let's just see if we can't find. Okay. Uh, mortgage, adjusted revenue. Okay. So Rocket seems to be doing, I just want to make sure I'm correct before I say. Let's see here. Okay, so let's just click this. All right. I want the presentation. Investor presentation. We have Ops 2021. That's what I want. I'll just do this. All right. So rocket companies, similar to, slow down, Upstart maybe. Number one lender in America, net promoter. Okay, all right. All right, let's see. Home financing, auto purchase, solar personal finance, partner, Rocket Cloud Force, data solutions, technology. Okay. Partners, right? I'm thinking that rocket companies, it's got mortgage, real estate, auto, financial services, and solar. But do they sources? Okay. I believe, I may be wrong, but does Rocket Company partner with a bank to offer the mortgage, to offer the loans? As in, Rocket Companies doesn't take on the risk itself? I need to do a little digging here on what Rocket's actually doing. Like Upstart, for example. Upstart has very low risk because Upstart's not lending out the money themselves. Upstart is like a middle person where Upstart's using their platform, their technology to get somebody to sign up for a loan, and then Upstart takes that loan and gives that loan to one of their bank partners. Is Rocket doing the same thing? Oh, how do I go back? Okay, so I might have to do a little more research here to understand, to answer your question, the difference between a bank and Rocket. I think that Rocket may be a middle person where they're using their technology, they're using their platform to get people on a loan, but then they're sending that loan to their partner, their bank partner. Okay, so I'll just have to look into that a little bit more to really answer your question. But I think it's similar to Upstart. All right, let me see here real quick. All right, just doing a quick little search here on the wire. Okay, yeah, rocket companies, you can call it a fintech, and it's like Upstart. Yeah, rocket companies will do a quick. Yeah, I know live streaming and trying to answer the questions like this isn't the funnest thing to watch. Okay, so yeah. Okay, so Rocket Mortgage is the mortgage lending business. It is also very profitable, especially since Rocket does not keep many of the mortgage loans on its balance sheet. Bam, there you go, right there. Rocket is just like or similar to Upstart, where they're using their technology, their platform to get people to sign up for a loan, but then they're taking that loan and then they have a bank partner. They have many bank partners. And then they're basically giving that loan then to their partner for a fee, okay, like a finder's fee. Like, we got this great loan for you. Here you go. You take on all the risk also with this loan, and you pay us a finder's fee for this loan. Okay, that's good. So Rocket makes its money from that finder's fee, right? And the bank, well, it's going to make its money from the interest payments on the loan, but the bank's also taking on all the risk. Rocket Companies is not, just like Upstart. Upstart hardly has any risk whatsoever on its books from the loans that it does because of the same business model. So that's the big difference between why Rocket is different from a bank. Number one, it's not a bank. It has to have bank partners enable to go search out loans to begin with. And it's using its technology to find people who are better suited for a loan. And the cost at which it is to acquire a customer is lower than the cost to acquire a customer that a bank would pay for. So that's why the bank can afford then to pay Rocket like a finder's fee for that loan. So I hope that answers your question, the difference between a bank and Rocket Companies. So Rocket Companies is not a bank, but it has bank partners that it then will, once they get the loan, will then give the loan to the bank. So I hope that answers your question there. Realistically, can it go all the way down to 230? For Nvidia, Nvidia down to 230. Let's pull this back up again. Yeah, I think it could. I think there's a real possibility that it could. It may take a couple of months, because if the Fed comes out and says we're going to raise interest rates, but instead of the second half of 2022, we're going to bump that up to Q1 of 2022, then there would be a real sell-off in the market. So realistically, I think it could, due to our environment, right? High interest rate would hurt a company like Nvidia. Now, it will not be hurt as bad as other technology companies. And the reason why Nvidia won't be hurt as bad is because Nvidia actually makes something tangible. And that's a real big difference from a company that just makes software. Okay. So the company that is making hardware won't suffer as much. It'll still suffer some, but not as much as just software by itself. It does. Thank you. It might not be entertaining, but I appreciate you taking the time and making sure your comments are accurate instead of just spewing opinions. Hey, thank you very much. I greatly appreciate that. The whole reason why this live stream is here, and the reason I do it, is for you. I want to answer your questions to the best of my ability. I don't want to just sit here and talk randomly about stocks. I can, but I would much rather spend my time answering your questions to the best of my ability. And again, if I don't know the answer, I will find the answer for you. So I greatly appreciate that very much. Oh, thank you so much. I love that little pear guy. Thumbs up right back to you. Love it. Thank you so much. I appreciate that. Appreciate that so much. Let's see. Can I get that little pear guy on here? So on my end, it doesn't show the pear guy. It just it just says this. I always think it's a good one. It's fun. Thank you for that. I appreciate it. All right. Any other questions at all? I know I didn't get to talk about HOG, Harley-Davidson. It's spinning off its electric motorcycle into a SPAC deal. So that's kind of cool. There's also an IPO coming up on Wednesday. Didn't get to talk about that, but that's okay. Maybe I can put out a separate video later this evening specifically about it. Samsara is the IPO. I think the IPO is a bit rich in its valuation, but Samsara, it may fetch a premium, but I also think that if Samsara would have IPO'd earlier this year, when the IPO market was a lot hotter and the macro environment was much better for this company, I think this would have been a really big IPO. But I think our current environment and the fact that the IPO scene is just cooling off. I mean, Rivian was really the last big one. I don't think Samsara is going to be as big as it could have been, but it's still a cool company nonetheless. So maybe I'll just do a separate video on that. We could probably just end this video by talking about tomorrow's catalysts, which right here on their website, tickertimenews.com. I went ahead and published what I'm looking at this week. And of course, today I just noted that the biggest catalyst for the entire week will be the FOMC meeting and news from the Fed on Wednesday. And then Wednesday afternoon, they'll release a statement. And then about 30 minutes after the statement, then Jerome Powell will come out and give a press conference, may or may not answer questions at the time. And they'll share with us their thoughts on inflation and tapering and raising rates. So that's the biggest thing that's going to move the markets this week. And I think that's why the markets move so much today. All right, for tomorrow, Tuesday, December 14th. Number one, Jack in the Box, ticker symbol Jack, JACK. They host an investor day. Now, last week, Jack in the Box announced that it acquired Del Taco, which their ticker symbol is Taco, TACO, for a 66% premium on the stock. And if we look at Del Taco's stock chart, we'll see that TACO. We'll see that once the announcement came out. Okay, let's open this up just a little bit. When the announcement came out, the stock jumped 66%. So you might think, oh, the stock's down here, right? Here, let me draw this circle to help. You may think that, oh, the candles are down here, right? This is where the stock is. No, no, no. The stock is trading up here. This is where the candles are, all the way up here. So when the news came out that Jack in the Box was going to buy Del Taco, it popped exactly 66% to the price that Jack in the Box is paying for Del Taco. And now the stock is in flat because everyone's holding on to their shares up at this price with those gains. Because eventually this will be taken off the market and the investors then will be paid out the price basically that Jack in the Box is paying for Del Taco. So their positions will be closed and they'll get that money. Now, I'm curious if Jack in the Box on Tuesday will add any color to what they plan to do with this acquisition. Okay. I think it's a good acquisition for Jack in the Box. It will help them expand. But is Jack in the Box more edgy marketing promotions going to fit with Del Taco? I mean, the company, when the announcement was made, let's just do the math here real quick. When that announcement came out, so it closed at this price. Right now, Jack in the Box is down 17.8% since the announcement of the acquisition. So, will there be any type of news coming out of the investor presentation that will get investors excited about Jack in the Box? Or are investors just going to continue to feel, oh man, we got the wrong side of the deal for this one, paying that premium, 66% premium? So that's interesting. One of the big things tomorrow is Lowe's. So let's pull Lowe's up. LOW for Lowe's. And this is the hardware store. Lowe's, Home Depot have both been performing really well. Now, Lowe's, though, as you can see, it is way up above, there we go, its trading channel. I mean, it has just gone and launched out of here. Now, Lowe's holds a financial outlook event. The last time they held this event last year, the stock jumped 6% on the news from the event. My question this year, though, is it has already jumped up so much and it's above its trading channel. And if we just measure its trading channel to where it is now, down here, it's 6.7% above it. So if the stock moved 6% last year, then maybe what we could probably get to here is that tomorrow's event is already priced in, since the stock is already up 6.7% from its trading channel. So I would just be careful on that one, but it could be an interesting one to follow. Now, of course, if Lowe's says something spectacular, then it could also move Home Depot, HD, ticker symbol for Home Depot. It could move Home Depot, but Home Depot is in the same problem. It's appreciated so much already that it, in all honesty, it needs a pullback. So that's Lowe's tomorrow with its event. Next up tomorrow is Eli Lilly. Ticker symbol is LLY. Now, Eli Lilly hosts an investor day, and they're going to share details about their initial financial guidance for 2022. So, what are things going to look like for Eli Lilly during next year, for all of next year? And they're going to share what's in the pipeline as far as research and development opportunities. What medicines are they working on? What are close to being brought to the market? What ideas are they researching for the future, right? So this could help move the stock. Now, the stock right now, if we look at this, it's been moving nice. As a matter of fact, this year, it's up 47.2% on the year. So it's had a nice move for the year. The thing about it right now, though, is it's recently pulled back, right? It's below its 50-day moving average. Even being up 1.8% today, it's still below the 50-day moving average, which provides a bit of weakness for the stock. Although it is right there at that 50-day moving average. And I do believe the candle wick did go above it. Yes, the candle wick did go above it today, but the candle closed below it. And then in after hours, it came down 0.2%. So Eli Lilly tomorrow has an opportunity to move the stock based on what they say about 2022. So those are a couple things that I'm watching for tomorrow. And again, the market will probably be just as volatile as it was today, waiting for tomorrow's news. All right. So remember the ETF that I mentioned for regional banking? The ticker symbol was KRE. That's one that I would be paying attention to. It was down 2.5% today. It's one I'd be paying attention to because if the Fed comes out and they talk about interest rates rising, maybe they do it earlier. Here's what I'd really like, to be quite frank and honest. I wish that the Fed would just come out and say, okay, we're going to raise the rates by this much on this day. Give us a timeline. If they gave us a timeline for when they were going to raise rates, that would ease so much FUD in the market. So much FUD would just disappear with that information. I really wish the Fed would do it. I know they probably won't, but hey, I can still wish, right? Okay, so that's a few things I'm watching tomorrow. And of course, Wednesday, all eyes will be on the Fed. But Lennar which builds homes. They're a home builder. They do report their earnings on Wednesday. Ticker symbol is LEN. They report their earnings on Wednesday. Now, Toll Brothers reported their earnings last week and they killed it. They totally blew it out. They blew past expectations. Now, Toll Brothers does build more luxury type homes with an average home cost of $900,000. Lennar, their average price is $500,000, selling price of a new home. So a little bit less there, which means their margins are a little bit less as well. However, I do expect good things on their earnings report. They've got an estimated EPS of $4.16 on revenue of $8.5 billion. So I expect a beat on earnings. Now, they did pull back today, 3.2%. They have run up. We can go all the way back here to October 6th, and they've been in a nice rally with just, one pullback here from about November 24th to the 30th, just a couple days there. And then today's pullback, but it's extended. You can see that. I mean, look at how far above its 50-day moving average is. Right here to today's close, 8.5% above that 50-day moving average. So even with good earnings, those good earnings may just be priced in. So be careful with that. But, again, if we go back and look at Toll Brothers, TOL is their ticker. And if we look at how they did, I mean, look at this. When we were looking at this prior to earnings, we were really digging into this one. It had these 3 areas of resistance. Whenever it got above 65.50, it would fall right back down. Well, right before earnings, and let me put that vertical there. Right before earnings, it had popped out and pulled back down, but then it just ran. And on earnings, it ran even more. Now, they weren't big moves, like 1.7, 2.6. So not big percentage moves, but they did move up in price. They started down here at 65. They went all the way up to a high of 65.61. So, which was a new all-time or a new 52-week high for Toll Brothers. So they did good on earnings. So Lennar should also come in and do good on earnings, but they're a little bit stretched. Maybe today's pullback will help with that. So, and again, Lennar isn't till Wednesday, but of course the Fed's going to take up a lot of the oxygen on Wednesday. And then on Thursday, we actually have quite a bit here. We have both Expensify and Rivian posting their first ever earnings as a publicly traded company. Those 2 earnings will be a really big deal for each company. I have no idea what the estimates are for Expensify, but for Rivian, the estimated EPS is a loss of $6.84 on a revenue of $1.03 million. And again, we talked about options trading on Rivian implies a swing of 14% up or down. It is interesting that its closing price today, 14%, would put it right at $100, which is my kind of support line there for Rivian. I won't buy it over 100. I will buy it under 100. So that's my line there. Also on Thursday, Delta, ticker symbol DAL, they host a capitals market day. Now, the airline industry, it got hurt today really bad. And it'll be interesting to hear what Delta says, because it's one of the big airliners in the US. So I'm just curious what they're going to have to say about their long-term earnings and their margin targets specifically, as well as an outline plan for it to restore its balance sheet. Those are the three things that I'm watching for with Delta Airlines. And then Alibaba hosts a 2-day Investor Day event, a virtual Investor Day event. Now, some of you may look at Alibaba as a potential value stock, right? I mean, the thing is down 60% from its highs. For Alibaba, it's a red flag for me. If Alibaba can assure investors that there is future growth, but more importantly, there is future growth without the interference from the CCP, then maybe Alibaba is an investable stock. But until that point, for me, it's a red flag and I stay away from it. And then we have pre-market Accenture, ticker symbol is ACN. We'll pull that one up. ACN. Now this is pre-market on Thursday. Beautiful chart. I mean, look at that. Absolutely beautiful. On the year, they are up 44.6%. Not big moves, but it's been a steady up and to the right mover on the charts. And that's all we can ask for, right, as investors? So they report their earnings pre-market on Thursday, EPS of $2.63, a revenue of $14.19 billion of revenue. Now, the company has outperformed revenue estimates 10 of the last 12 quarters and surpassed EPS in 11 out of the last 12 quarters as well. So keep an eye on them. Their supplier also moves, which is MHH. Now, they move, what's the percentage here? 75% of the time. Now, their stock has been performing horribly. It's in the, no, it's actually 7.6% in the green for the year. But what it does is when Accenture comes out with good earnings, they usually move up and then immediately fall back down. So it's just something to keep an eye on for Thursday pre-market. Also, Juniper Networks, and the ticker symbol is NPR. No, did I get that wrong? I'm sorry, JNPR. JNPR. Forgot the J there. I'll have to fix that. Let me take a note here to fix that. JNPR. I'll get that fixed immediately after we're done with the live stream. Okay, Juniper Networks. They've been doing great on the chart too, just up and to the right. But they're hosting a 5G tech talk. Now, anything 5G related is going to be pretty big. They're up 51% year to date. Now, right now, they're a bit stretched. In the market of red today, they were at least in the green, 0.03%. Hey, it counts, right? That didn't even move the company. I don't know. It moved it a penny for the day. But every penny counts, right? Anyways, they're talking about 5G, and that's always interesting because that's the future, right? So if they come out with some sort of breakthrough or something dramatic, right? then that could move Juniper Networks on Thursday. And then the big earnings for Thursday, and this is pre-market Adobe. Ticker symbol is ADBE, Adobe. They report their earnings Thursday morning. There they are. EPS of $3.20 on revenue of $4.09 billion. Now, on Friday, Adobe moved back above its 50-day moving average, which was bullish because it's been playing this little dip here. Now, today, it is still green and it is still above the 50-day moving average. That's a positive. The only thing worrisome a little bit about Adobe today, they got up to a high of 675. And then they pulled back from there to close at 658. Okay. So a bit of a gap there from its high today to where it closed at. So I think with good earnings, this could potentially pop up that I'm thinking $700 for Adobe. Now, if we go back and look at their run here over the past year and a half, they've had a really nice run with a couple of areas where they kind of level out for a few months and then move some more. Now, they're up 31.6% year to date. I really think it could get to that $700 mark on spectacular earnings. So, are advertisers coming back using Adobe's products to sell advertising to their customers? Because Adobe is like the backbone for the whole marketing sphere, right? Because all of your marketing agencies, they use Adobe's products to create those commercials you see on TV or those social media memes that you see, right? The marketers use Adobe. So, is spending coming back to marketers? If it is, then Adobe will post a good earnings report. So I'm definitely watching that one. That could be a real winner. Now, on Friday, we've got Darden Restaurants. They're reporting their earnings. The estimated EPS for Darden is $1.44, and that represents a year-over-year growth of 95%. That's big growth because they had shrunk and gotten hurt so bad during the pandemic. Their revenue of $2.23 billion would be a 35% year-over-year gain for them. Also on Friday, Winnebago, this is the other RV manufacturer. Last week, Thor Industries posted really good earnings. And if we go here right quick, just look at Thor, THO. Thor had really good earnings, really good. And I think it could be I don't know. As far as the stock goes for Thor, the market is missing Thor's potential. The RV industry and the boating industry are linked together. They move together, right? Their boats are being sold left and right. RVs are being sold left and right. But the market doesn't appreciate it. Otherwise, this stock would be at $200 right now. This is one of the ones where the market is just missing the boat. on it. Okay, so Winnebago does post their earnings. They have EPS of $2.34 on revenue of $1.03 billion. Now, Winnebago is WGO for Winnebago, and you can see nearly the same exact chart pattern that Thor had, right? Man, the market's just really not appreciating what the RV business, the RV dealers are doing. It's just a shame, right? All right. And then last but not least is NIO on Friday. Now, the reason I mention NIO, the Chinese EV automaker, is they are hosting NIO Day 2021 on Saturday morning local time, and it's very close to the Olympic Sports Center in Shanghai. Now, we're supposed to get new model releases from NIO during NIO Day 21. Three of them specifically, three new models. So we'll see if that helps to move the stock any. Could also potentially alter their sales and margin projections as well. And if those are altered to the upside, well, then that will be a nice move for the stock moving up. And you can see this overall pattern here. It's broken through this bottom band, but we didn't have but 2 touch points on this bottom support level here, which doesn't count, right? We need 3 or more. So if we adjust this so we can capture 3 or more, that puts it right there. So it did break below this, and it got down here to what is this? Just about $30. And then when it got to 30, people gobbled it up. Look at that. Volume rose under 30, it got gobbled up. Now it's back above in this. If on their NIO Day 21, if they have those 3 models and investors like them, and they adjust their margins higher because of these 3 models, that'll send the stock up. So one to watch because of that. Okay, so we've got here, what is this? VASF Tech. Let's look. VASF Tech. I'm not getting anything for that here. If I go over here and search for that, VASF Tech. I have no idea what that is. I do get a no information is available for this page. I also get a never click this link. VASF.tech. It says right here on YouTube search, never click this link. So I don't know what that is, but Mercy. So Mercy, you're posting this lowercase and uppercase. Joy is also posting these lowercase, uppercase. Gloria is also posting this. So I believe we're getting some spam in here now, guys. Well, I guess we've grown our live stream so much so that now we're starting to get spam. The spam bots are starting to recognize us. Okay. All right. Well, that's what I'm looking for. So what I'll do is, because I don't want to take up too much of your time. It's already been 2 hours and 12 minutes. And I know some of that is the craziness that happened at the beginning with the whole stream and the computer just shutting off. I'll create 2 individual videos, one on Harley-Davidson and one on Samsara, and release those later on tonight for you guys, because I did want to talk about them, but I feel like I'm stretching it long here, so I'll go ahead and round up the live stream here. Just make sure, if you like my perspective, if you like the information you get, make sure to click the like button. That's important. The second thing that's important is take the URL and share that across your other social channels. That helps dramatically. It really, really helps. And then the third thing is, if you want some more of this in an exclusive content way, then click the first link in the description and check out the different tiers we have on Patreon. There is a tier for everyone, and we give a lot of special bonus perks in each one. So check that out. First link in the description. Also, if you want to get some free stocks, Webull is running a promotion this month. So if you have not signed up for Webull yet, sign up for Webull, get your free money, your free stocks, and then you can sell them if you want to and close out the account and take the cash. But they're giving you stocks this month, a special promotion. So if you have not signed up for Webull yet, the link is in the description below. I believe it's the second link for free stocks from Webull. Take advantage of that. It's free money, okay? It just takes some time to sign up for the account and get your free stock. So do that. Webull is also a much better platform over Robinhood for the charting capabilities and the information that they give you. It's a little more complicated, but they give you more information than Robinhood does. Plus, there's a community of people talking around each stock as well. So if you haven't done it yet, do it for the free stocks, at the very least, for free money. So click that second link, I believe it is, for Webull, in the description below. And that'll do it, guys, for this live stream. I greatly appreciate you being here, and I will see you in the next video.